very much for joining us this morning for what is our second webinar of a series of webinars entitled Navigating the Changing Landscape of Tax Governance, Risk and Compliance. And excited about this one today because what we're doing is we're taking a holistic look. We're looking at governance, tax risk and control frameworks more generally. You may remember if you turned up to the first one, we focused on legislation in the UK, predominantly around SEO and CCO and business risk review. This time we're taking more of a sort of international global look at businesses and how they implement and enhance their tax governance and control framework. Very excited by the group of speakers that we have. If we go to the next slide, please, Natalie. So first of all, there's myself. I am the lead partner for tax assurance and risk management, which I'll define. We've got other people joining us from the group today, and absolutely delighted to have a chance to listen to Paul Whiteley, who's a group head of tax at LEK Consulting. And he and I got together a week or so ago where we did an interview, and so we'll show you that. And Mike Williams is also joining us. Now, he's based in Colorado, and I think it's 4 a.m. there. So he kindly offered to do a presentation earlier on, so we'll be showing that too. If we could go to the next slide. And while we do that, let me just remind you that at the bottom of your screen, there's a Q&A. Feel free to add questions at any time as we go, and we'll try to answer them in real time. So just to let you know, our team is called Tax Assurance and Risk Management. We are a team of about 20 people at BDO, and our focus really is just about improving the way tax is managed for all businesses across all industries. We basically want the CFO and the head of tax to sleep better at night. We want to improve your risks, processes, transparency, create that culture of no surprises, transparency, and good tax behaviors that you can share with your stakeholders, whether that's HMRC or global tax authorities, or to the board, or to the CFO or CEO. And that's what we do. And that's what we're going to be talking about a bit today. So if we go to the agenda very quickly, I won't talk through this. We have a full agenda, that's for sure. But what we're going to do, first of all, is set the scene. And I'm very fortunate to introduce you to Jason Land, who's a principal in our team, to talk about the need for a tax control framework. So over to you, Jason.
Good morning, everybody. So what I want to do is I want to start by talking about the need for a tax control framework. So when it should be considered, or just when it starts to need formalisation, really, what it's looking to achieve, and what a tax control framework essentially looks like. So on this slide, we've got a representation of the scale of businesses and their need for a formal tax control framework. So we've got smaller businesses to the left and increasingly larger, more complex businesses as you move to the right. Now, tax governance and control is important in every business, right? But the exact need differs depending on the size of the business and where it is within its life cycle. So as businesses expand their operations, they tend to become more complex. Complexities drive a need to implement formal structures to apply consistency in the ways that processes and operations work. This isn't just about the very largest businesses. Small businesses need to control their tax filing submissions, right? But they can do that in a less formal manner, more often supported by a smaller number of individuals, and they may have obligations outsourced. And medium-sized businesses, to a certain extent, can operate in this way, although where the numbers are much bigger, the amount of risk tends to increase if errors arise. And this often means that some kind of formality is needed with those medium to larger businesses, even just if it's just a light touch tax control framework, some formalisation kind of makes sense. And VAT really is a prime example of where tax is not typically outsourced. But where businesses become larger and more complex, there are diverse teams, there are more territories, there really is a need for more formality, need to have a structure, need for control, and a need for appropriate reporting. So whoever is responsible for tax can understand and manage the risk consistently. Essentially, where tax relevant activities take place across a broader number of people or teams or functions, and where those undertaking the activities are not necessarily familiar with tax issues that could arise in that particular area, then we need a level of control. We've seen hundreds of examples of this within, for example, multinational organizations where local finance teams roll over whenever a tax authority asks questions about a submitted tax computation because they feel the group promotes a conservative approach to filing, driving up their ETR. Two examples where computations and returns aren't submitted for multiple years, leading to penalties and interest charges. No one likes tax surprises. So essentially, what is best practice for a small business doesn't necessarily work within a medium-sized business, and that doesn't necessarily work within a larger businesses. And there needs to be a right-sized level of control and tax risks to support a business. So in the UK, we often talk to £200 million turnover businesses because that's kind of the threshold where our tax authorities, HMRC, see them as being large and hence more complex and prone to risk. But realistically, those beneath that threshold often need to think about this sort of thing as well. So at a high level, it's about managing and maintaining right-sized governance and controls. Next slide, please, Natalie. So back to my question, what is it looking to achieve? Well, the type of governance, the level of risk will invariably differ across an organisation. So it can also differ within an organisation. You might have strong controls around VAT or corporate income tax, but your customs duties could potentially be all over the place. You might have local teams managing that with no central oversight, no control, and everybody's doing their own thing. So essentially, we can say that different businesses, or even within the same businesses, there can be different ways of managing things. And this slide is looking to represent that. So in the top left, you can see we've got representation of an informal reactive process where data is reviewed or processed for a single purpose, and then additional work's performed on the same data time and again for slightly different purposes. There's often a lot of repeats, there's lots of errors. Essentially, it's a high risk, it's a chaotic, high risk, high cost approach to managing tax outputs. In the top centre, we can see a more structured approach where processes are considered and each iterative process adds to the value. It's much easier to understand the flow, how processes work, and what the reporting is up. So that's much more controlled. And then in the top right, we've got a slightly different approach where tax is managed and signed off through standard delegation of authority protocols, and in-territory processes are organically grown and managed entirely locally. Essentially, there's very little visibility of this through a centralised tax function. And all these drive very different risk profiles. Finally, at the bottom here, we've got things about the way that you operationalise tax. So you might have insourcing. So you might manage things in-house, and there needs to be really strong internal processing controls when you do that. There needs to be some level of processing controls around co-sourcing or partial outsourcing, and outsourcing tends to reduce the level of control required, although there really is a need to have some level of control still internally. We see a lot of questions from HMRC around that. So essentially, there isn't a one-size-fits-all structure. There are some key principles to managing all of this. Often it will come down to the culture of the business and what practically needs to be done. So next slide, please, Natalie. Let's just take a look at a very high level at the components that might sit as part of a tax control framework. So the OECD definition is the part of the system of internal controls that assures the accuracy and completeness of tax returns and disclosures. Pretty simple, right? And scalable to meet the needs of an organisation. Next slide, please, Natalie. Now, I wanted to show this, but I don't want to get into a lot of detail in the underlying piece. I just want to pull out a few key areas around this because it is different for every organisation. But essentially, there's a tax strategy, a vision or a policy at the top, which sets out the tone and the approach the business wishes to take in terms of its compliance or planning or structuring. There's usually management reporting back up the structure so that the operationalisation of the strategy and policies can be reported upon. And under that, there are mechanisms to ensure that the operationalisation of the strategy and policies are managed effectively. And it usually encompasses appropriate roles, responsibilities, accountabilities. But the key three areas I really wanted to focus on was around people. You can see a people box in that top grey row there. So what are they doing? Do they have the right information to operationalise policy and manage activities? Do they know what's expected of them? And do they see themselves as being responsible for tax? Or do they see themselves as doing something else with tax as a bolt-on? Process, to what extent are processes formalised and aligned with that central policy, fit for purpose, controlled, standardised? What reporting happens as part of that process? And how does that flow up the organisation? And then finally, it's around technology. Are systems fit for purpose? Are they working effectively? Do they provide the right data? Are they well controlled? And do they provide the appropriate reporting? Is there a need for additional technology? Pillar 2 is a big example of that at the moment. And actually, are you utilising the latest data wrangling or AI tools to make sure that you're getting the right information? These 3 areas touch on every component of the tax control framework and are key to controlling risks. Over to you, James.
Thank you very much indeed, Jason. And I just wanted to look a little bit at tax risk management, because that's something that our clients ask us a lot about, probably because they get asked a lot themselves about what their tax risks are within the business, and more importantly, how they are managing that tax risk. And as I said a little while ago, I think one of the things that we try and do is create that culture of no surprises for CFOs and for heads of tax risk. So a little bit more theory, just a little bit more, but the rest of the webinar today will be looking at very practical things that tax directors and CFOs do, some of the tools that they use as well. So bear with us and we'll try and bring it to life a little bit. So Natalie, let's go to the next slide, which looks very theoretical, I have to say. This is what we call the tax risks biosphere. Now, my background's been at Deloitte and EY, and I know Jason's been at PwC, and it goes by many names like the tax risk universe and everything else. Because at the end of the day, tax risk means different things to different people. But trying to get some common understanding is important. And I think many of you will recognize the 4 key elements there. There's financial risk, operational risk, strategic risk, and compliance and reporting risk. And being able to subdivide what tax risk means for you into those different different areas is quite important. Because, and this is a quote I've said for years and years and years, I strongly believe that the majority of tax risk comes not from the tax function or finance function, but from the operations of the wider business. Whether or not there might be a new product, whether or not the marketing team might go off and do something. Obviously, cross-border issues, international issues, customs, all this tariff stuff, all of this creates additional tax risk for the business. So often when we talk to people, we talk to HR, we talk to procurement, we talk to other teams, because that's where risks arise for. Now, obviously, I've touched a little bit on the tariffs point, and the world has changed, and what is tax risk today was probably different to what tax risk was only a few months ago. And it's very important for the head of tax, tax directors and CFOs, A, to be nimble, and B, to keep their ears to the ground and do that horizon scanning. And tax risk is about managing all of those uncertainties. So how do we do that? Well, let's look at the next slide, please, Natalie. So we try and articulate what it means in practice. And a lot of people on the call, no doubt, will be aware of the 3 lines of defense. So first of all, the 3 lines of defense is where the wider business identifies tax risk or areas which could create a tax exposure and escalate them up. And the second line of defense would be the tax or finance group. And third line of defense would be things like internal audit or third party, just to review, make sure everything's going on at the same time. And surrounding that, you'll have your tax risk framework, identification, assessment, management, and mitigation. And it goes round in a circle. And I always say there's a top-down approach and a bottom-up approach. First of all, the top-down. Tax risk needs to be on that board agenda. You need to have clearly articulated ways in which you define tax risk and in your business. What's your tax risk appetite, for example? What are your accountabilities and responsibilities? And for your pleasure, you'll see more about the RACI later on. And the bottom up means, are the business aware, are the people in the business aware of when to pick up the phone to finance and tax and say when there's a potential issue? That's key. And in the middle, you report that. All right, one quick slide. Natalie, the next one. Just some questions to ask. Now, I'm not going to read through these questions. I'm going to ask you to take them away and we'll issue the slides later. But are you in a position to be able to respond to these questions if you're asked by the board or other stakeholders, or indeed you should be asking yourself these questions? How is risk currently identified, assessed, and escalated? What's the governance around tax risk management? And those other questions there. And those are quite important. And those are the ones that are practical next step and what you need to do. So I think what we're going to do now is we're actually going to hear from one of our clients. Now, this is wider than tax risk. We work with Paul Whiteley in helping put in place his overarching tax control framework. So we're going to hand over to that now. And Natalie, if you could put the video on, please. Paul, thank you very much indeed for joining us today. Delighted to have you here. I was hoping you could start by just saying a little bit about yourself, your role, and the business.
Thanks, James. I'm Paul Whiteley. I'm the Global Tax Director at LEK Consulting. I've been working in tax for over 30 years in a mix of FTSE 100 companies and in-house and professional services firms. LEK Consulting is a global strategy consulting firm. We're in over 20 countries worldwide. And I lead the tax team. We're a very small tax team of 4 people globally, 2 in the UK, 1 in the US, and 1 in India. So we've got a lot to do.
Good. And how long have you been there? And what were the initial challenges that you had when you arrived?
I joined in April 2022, so almost 3 years. And up until that point, tax at LEK had been largely decentralized. So each office sort of did what they wanted in relation to tax locally. I was brought in to establish a centralized global tax function. And so I guess the first challenge I had was to understand the business, understand where the tax risks lay around the business, understand the structure. And once I had that, it was a matter of sort of thinking about what the most appropriate operating model would be for tax going forward.
Brilliant. And that's, of course, why you're undertaking this project to review your tax operating model at the moment.
Yes, exactly. Yeah, that's right. I mean, very early on, I sort of realized that what the function needed was, what the finance team needed, sorry, the firm needed was a tax policy, basically a rule book to sort of set out what our standards or expectations were around tax compliance and tax advice, tax management. What were the escalation pathways for tax issues? What was our approach to dealing with tax authorities, and what was our approach to setting our tax risk appetite? So that was step one. I guess the next phase has been this current project, which is operationalizing the policy, implementing it around the network.
And if you don't mind me asking, so as part of that journey, what did you find most challenging? What were the most valuable aspects so far in developing that tax policy and thinking about your future objectives in terms of more oversight and transparency in how tax is carried out?
I think a really valuable exercise was sort of undertaking the tax operating model, maturity model questionnaire early on, which sort of enabled me to understand where tax risks existed. It enabled me also to understand how developed or how embedded tax processes were in each local office. And from there, we could sort of develop sort of a heat map of where our key risk areas were and our key risk countries were, and to then plan from that an appropriate strategy for dealing with those.
Excellent. So it sounded like a bit of a sort of initial benchmarking, gap analysis. Let's see where you are and where you want to be along that route.
Yeah, exactly. And I think it was probably helped by the fact that we have a head of tax in the UK and a head of tax in the US. So you sort of had developed tax functions in those jurisdictions, tax as a benchmark, and then you could sort of compare other locations to those and say, well, some are almost on par, some aren't, some need more work. So it was a really useful process to go through.
And if I remember, I think you brought some of those people along with you on that journey.
Yes, we did, and that was sort of the first time that they had done that process as well. So it was sort of good to have them sort of assess where they saw themselves where they saw their own tax functions place in the broader scheme of things.
So you've already discussed a little bit what the objectives were, but really, what does success look like for you in this review of your tax operating model and where you want to get to?
I think first and foremost, success looks like each person having responsibility for tax or a aspect of tax compliance understands that and understands what their responsibilities and accountabilities are, and understands what issues need to be escalated and when. I think also a key aspect is oversight. So there needs to be some sort of process whereby I can get visibility and oversight of what's happening in each local office in real time, and be able to action that as appropriate. And I think finally, success will be achieved when there's a clear understanding of the importance of tax, the impact that tax risk can have upon the business, and the importance of properly managing that tax risk. And that's something which goes across not just people who have tax responsibility, but people who, the broader business.
So you obviously have some clear objectives where you're going to get to, and I personally can see the value that this is going to bring, but I reckon there might be some challenges along the way. What challenges do you think you're going to meet?
I think a key challenge is the fact that this is a new, sort of centralized group function, but a lot of our businesses run regionally, with regional reporting lines. And so getting local buy-in or regional buy-in will be key. There's various ways of doing that. I think that can be done through explaining the importance of, or the magnitude of the potential issues and the impact that tax can have on the business. But I think as well, it's also important to demonstrate to local finance teams that we're here to help. This isn't, we're not the police. We're there to sort of work with them to help them with their compliance and to get them the right answer, basically.
Yeah.
So I think that's key.
No, that's very helpful, and I hope you don't mind me saying this, but as part of the journey, we've been using some tools to help resolve that. So you talked about responsibilities and accountabilities, and we spent a bit of time together working on the RACI matrix. And I know that you also mentioned earlier a heat map that you put together. So what have you found valuable in those exercises? Have they been useful for you?
Yeah, I think in some ways they're useful because they confirm what you already suspect or think and it's sort of an empirical validation of what you believe. So that's quite useful. I think it's also useful from the perspective of informing others about these types of things. So it's good to go through the RACI exercise. I think it's important because it enables me to go back to my boss, the CFO, or to the board and say, well, these are things that you have responsibility for. These are things that you need to inform me of, and vice versa. So it's really good in just setting out clearly what people's obligations are in relation to tax. It's really useful.
And I really like that. I like the fact you mentioned the CFO and the board, because there are obviously other stakeholders involved if you're going to review a tax operating model. So to what extent have you been speaking or engaging with more senior stakeholders, the board or the CFO, on this journey, and do you have any sort of intention to report back or present to them?
Yes, I do. I mean, I engage with the CFO and with the CEO as well, and also with senior partners on this regularly. They are interested in this. We also have quarterly audit committee meetings where I've been keeping them updated on progress. And that's been really useful because I think it's been good for them to get a sort of a sense of where the challenges are around the network, and so going forward, that will continue. I think perhaps the next step will be doing more communication with local officers and with regional management as well, sort of getting them sort of up to speed with this.
So yeah, once again, I think that's brilliant, because I think communication is key, and getting people to join you on that journey is also very important. So my final question, just to sum it all up, but just in a few words, where do you want your tax function to be in, say, a year or 3 years' time?
I think that we'll have, as a result of this process, we'll have a much better understanding of where tax risks lie around the group, and we'll have a clear strategy for addressing those risks. And also, I would hope that we can support that with extra resourcing and technology where appropriate.
Brilliant. Well, thank you very much. It's a pleasure going on this journey with you. And thanks again for coming in today. So appreciate it.
Hello, and thank you to Paul. And we are going to talk a little bit more about the practical steps. So I'm going to hand over to Jason. And this time I really hope that we can get over the technical issues. Here we go.
Hello, can I just check that you can hear me? Perfect. Okay, thanks ever so much. I haven't got a great track record of this from the first part, have I? Apologies for that again. So we've talked about the tax control framework, the tax risk management, and how LEK are working to assure their tax processes. Paul, thank you so much for doing that interview. We did it after quite a detailed workshop that morning, so he was good that he was still on fine form for that particular session. What I want to touch on now is just what we see as the four core items that businesses need to focus on as they embark on this journey or look to enhance what they currently have. Because unless we do that, it isn't really tangible, the steps that organisations need to go through. And that's really what we want to focus on here. So Natalie, could I have the next slide, please? So what I've got 4 key steps. We've got 2 on this slide and 2 on the next. So 1 and 2 here. So these first 2 really are interchangeable in terms of which comes first. But essentially, 1 here is that, assuming that you're no longer small, you really need to have some sort of documented and articulate tax policy which sets out your aspirations, which define, your approach to tax, how compliance should be managed, the escalation points, reporting, all of these things that you see on the screen here. Having that codified and represented across your business so people understand what your aspirations are and what you expect of them as a shadow tax function or as a tax function is kind of that key step, really. Point 2 here is about understanding the current state. So if you're small, then it's quite easy to understand where you are. You can get your hands around that, really. But as you grow larger, that becomes increasingly more difficult. And being able to benchmark the relative maturity of each component of your operations, be they in a single company, that example I gave earlier, across a small group with different teams, or across your global operations, is really invaluable because it allows you to understand your strengths and your weaknesses, and essentially what is really strong and where there is risk, and start to think about how you can leverage the good practices that you see and what to do where you fall beneath the standard that you want to apply. So an assessment, what we're talking about really here is an assessment of the maturity of your tax operations, essentially allowing you to understand where you are against that scale. So what is that scale? Well, that might be, am I able to be compliant? Am I managing risks as I want? Do I have a consistent control environment? And how do I measure versus, my peers, tax authorities? It essentially allows you to make educated decisions about what you might wish to do in relation to that. And Emma's going to come on and talk about maturity assessment in more detail shortly. Next slide, please, Natalie. So coming out of that current state assessment, you may decide that you need more formality, more control, more reporting, or better processes, maybe some technology. And step 3 really is about that deeper dive of what you can do to enhance your position. You've got that overall maturity assessment. Actually, you might need to get into more detail into an analysis of who does what through the development of potentially a RACI framework. And James referenced a RACI in that video that we've just seen with him and Paul. So that's responsible, accountable, consultative informed. It allows you to overlay what people do in a process and allows you to think about that risk and control piece. So where does my risk and where do my controls sit? Do they manage the risk effectively? But understanding how tax is operationalized is really that first step to getting control. And we're increasingly seeing tax authorities ask for RACEs or risk registers or risk and control framework documentation more and more now, because they're starting to think about tax from a control perspective. And then finally, 4 is about introducing any overlaying adjustments of how tax is managed and will depend on the outputs of stages 1 to 3. Realistically, 3 is dependent upon 1 and 2, right? But usually it involves the introduction of additional reporting, be that informal internal reporting or implementing some kind of overview management information type technology dashboard or whatever it might be. It kind of flows from those first current state assessments. Thanks very much. That's all for me.
Thanks, Jason. Hopefully you can all hear me now. Next slide, please. Perfect. I'm now going to talk through our Tax Operations Maturity Model tool, or TOM tool for short. So if you go to the next slide, please. So our Tax Operations Maturity Model tool is a simple to use diagnostic and benchmarking tool. The tool has been created based on established international principles to assess the relative maturity of your tax operations, tax governance, and underlying tax control framework. The TOM provides transparency over your tax risks and helps to identify gaps in your tax control framework, which your key stakeholders can use to make informed and targeted management decisions, which can directly support your strategic tax objectives. The assessment focuses on all taxes, so not just corporation tax, and includes 80 questions for you to complete. The assessment identifies whether your maturity is one of 5 levels, and these are, as you can see on screen, level 1, undeveloped, level 2, developing, level 3, defined, level 4, managed, or level 5, optimized. And having a less mature tax control framework does tend to raise the level of risk for your business. You will shortly see a demo of the TOM questionnaire, which I prepared earlier this morning, which shows how the questionnaire works in practice and is really there to show you how we work with the questionnaire. And it also includes details of the different versions of the TOM available to you. In the last 12 months, we really continued to improve our TOM to make it easier for you to navigate. And also it is now fully customizable should you wish to tailor this further to your business. Next slide, please. So I'm now going to go through 2 case studies of projects we have worked in over the last 12 months. And firstly, we have a global strategy consultancy firm who is based in the UK, but with offices in the US and Asia. Now, this business wanted to review their approach to tax with a view of developing a best-in-class tax operating framework. We initially rolled out the TOM questionnaire across those businesses and had interviews with those individuals who were completing the questionnaire to further understand the existing framework they had in place. Following the completion of the questionnaire, we had further interviews with the clients to discuss the results, and we created for them a set of prioritised actions, which then they could take forward, and we also assisted with them with future work streams. Also, we presented our findings to the board, which the client found really helpful in the form of a tax roadmap, portraying those prioritised actions in a nice visual way. Next slide, please. Secondly, we also worked with a global manufacturing business who was looking to implement a more centralised tax control framework, and the head of tax wanted to improve its reporting lines with regards to tax risk management. So initially, again, we held a workshop to walk through the questionnaire and customise it to the business, which we then rolled out to 60 of the group entities, some of which were not based in the UK. Following this, we created TOM summary outputs for each of those 60 entities, and again, a set of prioritised recommendations for the business to take forward. We also created a summary report which the key stakeholders could use to compare different entities in the group, and again, compare different jurisdictions as well. I'm now going to share to you the recorded demonstration of our TOM tool so you can see how this works in practice.
To access the Tax Operations Maturity Model tool, or TOM tool, you can do so via our BDO Global portal. On the homepage of the portal, you can scroll down to the Quick Link section where you'll see access to the variety of TOM questionnaires that we have. This includes TOM questionnaires related to ESG or responsible tax, tax health checks, or tax questionnaires for those that fall under the Senior Accounting Officer regime. If you were to click on TOM, you can also see that we have a variety of full TOM questionnaires for lots of different countries. And we've been working hard with our BDO Global Network to ensure that the questionnaires are relevant and appropriate for the respective jurisdictions shown on screen. If we were to click on Full TOM UK, I'm now going to give you a flavour of what it feels like to complete the questionnaire. In the questionnaire, there are a number of different sections, and in each of the sections, there are a number of questions for you to answer via multiple choice. For example, in section 1 of the questionnaire, we look at tax strategy and tone of the top, including how often is tax on board agenda in your business. Once you've answered the questionnaire in each section, you can go to the next section, and we have covered a variety of topics. So in section 2, we cover tax governance and managing tax risk, but in later sections, we go into detail of specific taxes such as corporate tax, employment taxes, VAT, and customs duty to the extent it is relevant. In tax governance and managing tax risk, we cover all around accountabilities and responsibilities. And again, you have a series of multiple choice questions, such as, your tax process is documented? How do you define your tax risk management framework? And we also give you the opportunity at the bottom of this section to highlight where you think your 3 top key tax risks are for the business. So, for example, is it key man dependencies? Is it changes in tax law more generally? Or is it ongoing tax audits or the threat of tax audits which are upcoming? Once you've been through and submitted answers to each of the sections, this will then be sent to our BDO team, and we will develop your PowerPoint presentation, which will show you where you sit on a benchmark scale in terms of your tax control framework. This is an example of what the report looks like that you will get after you have completed the questionnaire. And you can see on the right-hand side of the screen the different levels in the tax control framework. And this ranges from level 1, from an undeveloped tax control framework, to level 5, which is fully optimized. In this example report, this business have got level 4 managed, and we detail here what that means for your business. And we also provide the full results to each of the questions in the questionnaire. If I scroll down, we can also show you that we highlight the key risk areas which have come out of the questionnaire. So, for example, for this business, it's customs duty, employment taxes, and compliance with the Senior Accounting Officer regime and corporate criminal offence legislation. We also provide the results in a heat map, so you can visually see in a good way where you sit in the different levels in each of the sections. So we briefly talked about section 1 and section 2 around tax strategy and tax governance and tax risk management. And the business here is doing fairly well. This can be compared to managing transfer pricing risk, where this business is lower on the scale. At the beginning of this demonstration, I showed you how we have different TOM questionnaires for different countries. And for those businesses who have global operations across multi-jurisdictions, we can provide a report which shows you how each of the individual businesses in the different countries scored, and you can compare these against each other. I hope that this helps demonstrate the output of the TOM questionnaire, and please do let us know if you have any questions on this.
And thank you very much, Emma. And we have some polling questions for you now. So these polling questions will stay up on screen while we hand over shortly to my friend and colleague in the US. but I think it would be valuable if you could just spend a minute or two having a think. So what have we heard so far? We've been trying to discuss and describe the benefits of a tax operating model or a tax control framework. And really, the benefits here is it's all about providing greater real-time control, enhanced tax risk management, and a phrase I like to use a lot, which is all about ensuring you have expected standards of conduct in how you carry out tax activities in your business. And I want to thank Emma as well for the demo she just did, because that demo on the tax operations maturity model is where all of our clients start. It provides that initial snapshot about where you are now in terms of your governance and the maturity of your tax operating model, and where you're likely to be or where you think you could be in the future. So we always start with that. So I'm going to leave you with these 3 questions. Have a think about where you are currently, where you're likely to be, and the questions on tax risk management. But for now, I'm going to hand over to my colleague in Mike. Again, this is pre-recorded because, as I said, it's about 4:30 or 4:44 in the morning in Colorado. And Mike, who leads up the tax risk practice in the US, will give some perspectives from that side of the pond. So please, over to that video, Natalie. Thank you.
I'm a tax principal with BDO US, and I manage our US income tax accounting and tax risk services practices. Thank you for joining us today. I'm going to spend a few minutes discussing the tax risk landscape in the US with a focus on these topics that you see here on the slide, and how we're seeing US companies manage their operational tax risk with a focus on their control frameworks. Now, companies in the US are faced with challenges on many levels in managing their global tax risk, similar to companies outside the US. However, as everyone may know, the regulatory environment related to corporate governance is slightly different in the US as compared to other countries. A changing tax regulatory environment with more complexity, more competition for skilled tax professionals, more scrutiny from global tax authorities, internal budget constraints, and outdated technology, and more, all continue to put pressure on internal tax departments. As a result, we're seeing companies challenged with maintaining highly functioning internal tax departments. More competition for skilled tax professionals is creating higher turnover. Obviously, oftentimes the turnover results in the loss of institutional knowledge, among other things. Companies that are growing significantly or that are experiencing change via an IPO, restructuring, internal transformations such as ERP implementations, are seeing internal resources further strained. This all creates operational tax risk, as I'm sure everybody understands, and companies are spending more time managing this risk. Companies need to continuously revisit their control frameworks. We're seeing companies enhancing their tax operating models via in-source, co-source, outsource solutions, probably today more than ever, just to keep up with the ongoing complexity. As part of our annual tax strategist survey for 2024, and this can be accessed through our BDO US website, we surveyed 180 senior tax leaders during 24. The top 3 sources of tax risk for tax leaders were, and I'm sure none of these will come as a surprise, the inability to keep up with changing regulatory requirements. And as everyone knows, as of last week, we now have a new administration in the US, and we could see new tax regulations near term. More recently, we also had Pillar 2 that companies are still having to manage from a data perspective, resource perspective, and so on and so forth. And again, it just continues to get more complex. The second source tax leaders cited was technology challenges and/or outdated technology. The third source was the inability to keep up with rapid growth, and I'm sure many of you, if not all of you, can appreciate items, those areas. I should also mention that an area of tax risk that continues to challenge companies in the U.S. for both public and privately held companies continues to be financial statement risk. It's no secret the regulatory environment involving the SEC, PCAOB, and other regulatory bodies is demanding on companies. Tax is still a contributor to restatements. This is more often than not due to a deficient control framework. Companies are faced with getting more done with fewer resources and limited and/or outdated technology, which obviously creates a higher level of risk. Now, we assist companies on many levels when it comes to managing operational tax risk and deficient control frameworks. We encourage companies to pull us in as soon as possible. Naturally, if a company experiences a control deficiency, for example, we would recommend immediately reaching out, as it may take time to remediate and enhance the control framework. High turnover, issues with systems, data, upcoming business transactions are examples of triggers prompting immediate discussions. Once a company decides and is committed to explore changes to business operating models, supply chain, and/or its organizational structure, a company should start considering the impact to its control framework and what would be needed to effectively manage these changes from a tax perspective. Companies that are considering an IPO should plan to operate as a public company well in advance of the IPO itself. For example, this would include having a tax control framework and effective quarterly reporting process in place, among other things. There are many ways we help companies depending on the need. We're flexible and we're able to customize solutions to suit a company's specific needs. The first step is to understand a company's current state. We do this via interviews of company stakeholders, questionnaires, and online tools, including BDO's proprietary tax operations maturity model, or TOM. We leverage the results to evaluate a company's existing operations, and we identify areas of opportunity to enhance the effectiveness of a company's global tax operations. After assessing the results, we determine a path forward, and in doing so, we would work with our clients directly. This may include partnering with our tax automation and innovation team to help determine the most efficient use of resources and technologies. Or we may need to create or enhance an existing tax control framework with a view towards mitigating existing tax risk or remediating deficiencies in a company's control framework. Ultimately, the objective is to mitigate a company's overall tax operating risk, create an effective tax control framework, and ensure the tax function is operating efficiently and effectively. In other words, we're looking to help tax functions be more successful, focus on more strategic initiatives, and continue to add value to their organizations. Having been in a tax leadership role with a large global company myself, I can appreciate the challenges that tax leaders regularly face. Tax leaders need to adapt to rapidly changing business, tax, and regulatory environments today, which obviously brings many challenges on many levels. It's essential that tax leaders approach these areas proactively. Thanks again for joining us today, and should you have any questions, I'd be more than happy to connect directly to talk in more detail about our service offering in the US.
Thank you very much, Mike. I say thank you, even though he's probably not on, but I was very grateful. Mike and I have been working together for many years. At BDO, we're working hard to develop a global tax risk team because a lot of the methodologies that we use to manage risk, work with our stakeholders, including tax authorities, and report to boards and CFOs is common across all jurisdictions. So I spend a lot of time in Europe. I spend a lot of time talking to our contemporaries in the US, Canada, Australia, etc., because tax risk, whether we like it or not, is on the agenda on a global basis. And a lot of businesses, especially multinational ones, are looking to create a global tax governance and tax control framework. So we do a lot of work in that area now. So just some concluding comments. Now, when I spoke to you earlier on, I sort of did a quasi-apology because I know there was quite a lot of theory there. We had the tax risk universe, all those little bubbles. We had a lot of matrices with various elements of what controls or what makes up a tax control framework. And all of that's very, very important because it's vital to understand where you want to be in developing that tax operating framework, tax control framework. But what I wanted to end with was just a reminder of some of those practical points, the journey that we go on. We call it a roadmap, the journey that we take our clients on. And if you can go to the next slide, Natalie, very quickly. So we have worked very hard on this tax operations maturity model. I know there's similar types which are out there with other firms as well. And what we've tried to do is create some consistency on a global basis. So we, as you might have seen when Emma did the demo, we have a sort of standard questionnaire that we use, and it's slightly customized for different countries because, of course, in the US is a state tax and etc. And what we try and do is get that benchmark about the strength of the governance in each particular jurisdiction. And if you drill down into the UK, what we do is we ask questions around the strength of the compliance process generally, but then we drill down into transfer pricing processes and controls, employment taxes, indirect taxes. We talk about responsible tax, and you get that immediate snapshot. And so far, our clients have really benefited from seeing where are we good. So it's sort of, as Paul quite rightly said, it sort of tells him what he knows already, but actually reinforces or supports where he might know, or there might be gaps, or actually there might be some gaps that you're not aware of. And so we do find this as a really good starting point. And keeping it with practical points as well, if we go to the next slide, please, Natalie, which I'm sure a lot of you are pleased to hear is actually the final slide. This talks about a lot of the tools that we use. Now, I have 2 minutes, so I'll tell you a little story, but a RACI matrix is a snapshot of it on the right-hand side, which stands for responsible, accountable, consulted, and informed. And I've been using this for many years. And I remember I'm looking at Jason across here because I remember using this for the first time. And I wasn't, hand on heart, entirely convinced that there was going to be a lot of value in spending time on this. And now I use it as my bread and butter because you can't really think about how you manage risk. You can't really think about those expected standards of conduct and tax in your business until you know who is accountable, who is responsible for managing tax. Now, of course, it might be quite straightforward because, of course, for corporate tax compliance, that's going to be, the ultimate accountable person is going to be the head of tax or the CFO if you don't have a tax team. But what about customs? What about global mobility? What about share schemes? Where does that lie? Where about some of those risks for tax when it comes to procurement? Off payroll labor, you need to have that clearly defined where it lands or it will slip through the net. And so by doing this exercise, it really creates the foundation for all future conversations around your tax operating framework. Now, I don't believe in documentation for documentation's sake. So you don't need process maps for everything, but sometimes it's valuable for indirect taxes, for accounts payable, accounts receivable, maybe some of the process around some of that global mobility, important. HMRC are going to ask you, if you're if you're a large business, they're going to ask you for your tax risk register. Are you ready for that? Do you have that? Do you have the technology to support that, which is your ERM technology? Do you have, if it's a big team or even just a finance team, do you have clear organizational design in terms of reporting mechanisms and who does what? All of these make up, and as it says at the top, the typical tools on the journey in terms of creating a tax control framework. And this is what we come out and talk to our clients about, and we help them develop. And overarching that, underpinning it really, I suppose, is your tax policy or governance paper or approach to tax paper, which is your expected standards of conduct in how tax is carried out in your business. And those are the sort of It's almost like a Bible for tax. And it aligns to the matrix that Jason was demonstrating earlier and your risk map as well. So in the final minute, I don't know what the results are to this, so it's going to be very exciting. Hopefully more than 2 of you have responded, because that'll be embarrassing. But let's have a look, Natalie, at the results of the polling questions, which we will say. Here we go. Okay, yeah, more than 2, so that's good. So in terms of your tax control framework, where do you believe undeveloped, developing, define? Okay, well, you don't want to be optimized. I didn't tell you this at the start, but there's not necessarily value in having to optimize everything. There's also commercial benefit. We would hope you would get to a defined basis or enhanced even. So if you're in level 1 or level 2, why aren't you quite there in defined, and what steps do you need to do to get there? And maybe you need to break it down into those TOM categories. How would you define your tax risk management framework? Thank you for your honesty. So good. I say the majority of you are focused on everyday tax risks. It's unusual for it to be fully embedded within the overall risk environment, but some of you have got that already. So the final question was an open text question, and all I've got here is the fact that you've answered it. And so what I will be doing is I quite like word clouds, they're quite fun. So I'm going to create a word cloud on that. And so if you do want to see the results to that, I think we'll be sending out an email with a recording, so you can send it to everybody else. I know if you have also asked for the slides, and we'll be delighted to share that with you. So thank you so much for the hour this morning. Hopefully you found it interesting. Thank you again to Paul for his kind interview. And then when he wakes up, I'll thank Mike as well in the States, as well as Emma and Jason in the room.